Welcome everyone to this episode of Perpetual Perspectives powered by Vest Exchange. Vest is a novel perpetual futures exchange built on ZK Sync. I'm your host Stoic, and today I have the honor and pleasure of having with me Ryan, aka the Flow Horse, previously known as Cantor Clark on Twitter. He's been in the game for over 15 years, trading both traditional markets and crypto, and he has a plethora of knowledge as it pertains to the markets. I see him as an OG, and I'd also like to preface this episode because it's a special one for me. I've learned a ton from Ryan and the information that he's put out over the years. So this is definitely a special episode for me. Thank you for sitting down, for having this discussion with me, Ryan. And without much delay, let's get right into it. Is there anything that I missed out that you would like to fill in the gaps for in terms of your introduction?
No, I think you covered it.
All right, awesome. So I'd like to get straight into it. So for the most part, you've talked about your background and story at length, time and time again. And for anyone listening in, I'd really urge you to read this interview he did with Alpha Male in 2022. So you talk about starting at a prop firm, going from systematic trend trading initially, and transitioning from there. So my question is, what did that transition look like, and what urged that transition for you?
I think most people should try to steer towards being somewhat systematic, but there's always going to be a level of discretion and nuance that ends up finding its way into your trading. When I came to crypto, I tried to be more systematic in crypto, and really, so it wasn't early on in my trading that I continued to try to trade systematically. It was more like when I was trading crypto and still trading, when I had hands in both markets, as I do again more recently. But I was trading crypto more systematically, and that was because really I couldn't focus that much of my time on this market, and there was some, I would say, just really rudimentary or very simple trend following systematic like strategies that worked, and that were a little bit more low time preference than some of my higher time preference trading. And for anyone who's listening, there's a lot of people, every time I use these phrases, they mistake them for high time frame and low time frame. So high time preference meaning like more of the intraday, lower time frame stuff, and low time preference meaning, I don't really care what happens in the short term. But I mean, I've always had the discretionary aspect in my trading. I think that what people need to do, and what I've always tried to do throughout my trading career, is have some kind of systematic component. It doesn't have to be systematic. First thought might be like quantitative systematic, and having some kind of very defined entry and exit criteria. When I say systematic, more or less what I'm talking about is having a relatively defined process, some kind of rubric or axiomatic framework that you lean on, rather than just like stepping into the market every day and winging it.
Yeah, and just a follow-on question to that, I see a lot of people referring to you as a scalper, but you scalp and swing depending on the conditions. And in recent months during the strong uptrend, you talked about moving away from being extremely focused on nuanced order flow. So the following question I had for you was, what does your trading look like in the bear, and how does it transition during a run up into a strong trend?
Yeah, it's funny, like crypto Twitter loves to define people and put them into certain categories and crystallize them there. There's like some very well-known swing traders, some very well-known position traders, and then there's like a group of scalpers that everyone's familiar with. Yeah, I feel like this is such like a sign of the immaturity in this market, because from where I come from and my trading background, like my trading is it could be literally anywhere from 2 seconds to 2 weeks. Like that's the best way to put it. And it's very much dictated by, again, it is dictated by the environment. It's dictated by, obvious conditions. It's also dictated by my temperament, how I'm feeling, how available I am, how interested I am in actually like getting in the mud and trading. If we're in a bear market, and that's kind of taken for granted that you're able to identify a bear market and identify a shift in conditions, whether that's a shift in the type of people that are trading. People are they use the term PVP a lot. So more insular, more, there's no new capital coming in. Liquidity is a little bit less abundant. Price is more bracketed and range bound. then I'm going to be more focused on the lower time frames, because obviously there's less fuel to sustain things, compared to a period like we've come off of. We come out, like, if you look back on 2023, there are long periods of consolidation, but there's some great rotations of trade during that. But only really 2023 Q4 did we really just have kind of an up only period where the market was like ruled by momentum. And it was like a rising tide for most of the assets. You could kind of just throw a dart at the board and take advantage of that flow. So it depends on, like, if I'm able to spot that shift, and it's more of like it's not like a secular shift, but it's the intermediate to higher time frame trend. And I've done a decent job of, in this market, approaching those decisions, or making those decisions, and also getting positioned on those trades that, I guess, involve less maintenance, um, by reducing it to some kind of systematic approach. And for me, that's always been like leaning on one of them to lean on, and not giving everything away, even though it sounds so silly when people say that, like they're giving away some fucking recipe. Uh, is just a 20 period moving average, a 10 period moving average, weekly charts, 3-day charts, and seeing that there is actually a very significant shift that's taking place, contextually. And it's not something that is just, like, trivial, taking place on an intraday time frame. When there is a major shift, like, yeah, I honestly, I tend to still be one of those people that does overtrade, until recently, actually, where I was able to really step off this market. And I would say that a lot of that is from, it's actually just from being a new dad. And and I say that because, like, if it wasn't the case that I was a new dad, and looking back at last quarter, I still end up trading a lot of, uh, I end up over trading the larger moves. And I don't want to say like over trading, like I cap my returns, because I continue to trade because I continue to outperform what I consider a benchmark, a relative benchmark. Um, but I do see that, I am incurring a decent amount of transaction costs doing that. I am trading more or less around positions at that point. It's just, I've always traded around positions, whether it's core positions. When you share this on Twitter, everyone takes it as like, if I'm talking about a trade, most of the time I'm talking about futures positions, and I try to, like, not mess with, some of the more significant spot positions that I picked up. But it all depends. Like, if I'm able to do a good job of discerning whether or not we have, like, that extra juice. And I think, it's kind of obvious now that the market has had that extra juice for a while. Um, and I will zoom out a little bit, because you're really, from, again, like I said, if I wasn't a new dad, I would probably still do it, because I absolutely just love trading. But, like, now I look at them like, no, I'm gonna, my low time frame chart became like an hourly chart, a 30-minute chart. I realized that there was a lot of positions early that I was over managing. And, it's one of those things where you enter into a trade, and you realize, like, if you had a distraction, or if you were just away from the computer, you would have ended up returning, X amount more, versus sitting at the desk and continue to monitor things in a low time frame. And thankfully, my daughter has been one of the reasons why I've been able to step away, because I actually just, I've enjoyed doing that more than trading in many cases over the last few months.
Yeah, it's beautiful, and thank you for sharing that. Just going through that line of question a little bit more, what does risk management look like for you now? I mean, you pretty much talk about not having a stop loss, and you've been doing it for long enough that you can sense when things are changing, and when to get in and out, in that manner. What would you suggest for people that are just getting into trading or intermediate in terms of risk management?
I mean, for people that are just getting in, I think you're always going to want to, it's sort of like every subject, right? Like, you approach a subject, at least for me, I approach a subject, I know that it requires a decent amount of self exploration and experimentation, sort of like scientific method. And then it also, for me, requires, like, to do my homework on the academic side, and read the literature, and to study what people have said before you, because there is obviously some breadcrumbs there. And if you're approaching any subject, you're going to have what appears to be like the cardinal rules for that subject. And trading is, always use a stop loss, never risk more than you're willing to lose, which always is silly to tell people as they're entering the casino. Have X amount of risk per trade. These, when I talk to someone who's new, I would always say, like, just be prepared to lose your account a couple times over. Absolutely always have a stop loss. And then, as you get really good at something, it's sort of like, as you get good at playing a sport, you develop a style. As you get good at trading, you develop a style. You realize where you can, ways that you could deviate from what you heard were like the the rules etched into stone. And for me, that was like one of those things is a stop loss. Like, yeah, it depends. Like trading, um, there are certain times when I'm trading when I will place a hard stop, and I think it's a good idea to have some kind of hard stop, because you've seen how exchanges can, there can be issues on exchanges that lead to you blowing up where maybe you weren't even considering, any kind of outcome being possible, but there's something that happens and you're wiped out because you don't have a stop loss. And I still do have a lot of times I will have like a tail risk stop loss on something that I'm swing trading. But yeah, I haven't really used stops for like, I'd say 90% plus of my trading. Um, a lot of the trends, especially if you're like trading momentum, you have to find, I think, a better way to characterize price other than it just trading at one point, at one price, at one point in time. Like it's sometimes just way too arbitrary to just place a stop below a low, because that's such like an obvious area where the market's going to seek out that positioning and then ultimately a reverse. So you have to have something that kind of characterizes the trend. And for some people, that might be, a measure of volatility. It might be a multiple of volatility, whether you're using a range, something like a average days range or half a day's range, or, it might be moving averages. I think structure is good, but I think you have to expect that a lot of times those levels get hunted. Risk management for me it's one, like I'm spread out now more than ever.
Hmm.
Post FTX, obviously that's really important. I don't really, I'm not like the same trader I was years ago, to be
Right.
honest. I think it comes from a lot of things. It comes from getting older, and definitely comes from being a new dad. And it also, it's a place of like, when you build yourself to ideally to a certain bankroll, you don't have to. There are people out there that they're going to laugh at this, right? And they're going to talk about bet more and all that bullshit.
Yeah,
The
yeah,
truth
yeah.
is, like, all the Suzu quotes that people idolize, like the dude blew up, right? He's a good example of someone who like really talks about doubling down. And I
Right.
think these things are repeated, like parroted on crypto Twitter. All that advice it doesn't help you last in the long run. Like your best bet is to have a smooth equity curve. Um, not shoot for is to actually shoot for linear wealth rather than try to like
Hmm.
fucking hit home runs. So I've always tried to be a little bit more. I am more recently more, I guess, reserved and modest about my approach. Um, yeah, I probably just went on a tangent there because
No, no, that
you
was
asked.
great. That was great. And along the same lines, you're talking about, blowing up accounts. And through you, I want to provide this education to listeners in terms of leverage and path dependency, right? It seems like there's still a lot of people mistaken about what the actual use of leverage is. So, is there any light that you can shed on that?
Yeah, I mean, listen, like the most common use of leverage in this market is to amplify exposure. Um, it's leverage is used in traditional markets. Funds use leverage. Regular traders use leverage. They use it effectively. They use it to amplify exposure, but it's never like it's never the egregious amount that you see it in crypto. Well, it should be used for, especially in this market, because of the counterparty risk. There's no real risk-free rate in this market. There's counterparty risk, whether you're, regardless of what platform you're on, what you're doing. You should be using it to mitigate that counterparty risk, because the benefit of this market is you can custody your assets. You can keep things in hardware while you don't have to have all of your money on an exchange. The same thing goes for trading. When I was trading futures, right? And I was a futures trader previously. Um, I would never keep a ridiculous amount of money on the exchange. There's already leverage by trading ES contract, by trading a crude oil contract, NQ, whatever. Uh, the exchanges outside of crypto, brokerages, they go under. So you really just want to use it to make sure that you could trade based on the capital you're trying to trade to begin with, but you don't have to have all your capital exposed to one particular area. And here it's it's so important here, because exchanges don't even have to blow up for people to lose access to their funds, as we've seen with certain like bucket shops that exist.
Mexi.
Yeah.
Yeah.
Not to say though, like, there are many times when it makes sense to juice it up a bit.
Right.
It's like the whole idea, like I said, when you start trading, you hear like all these rules, and a lot of them are bullshit. Like a lot of rules are bullshit. Um, and you'll realize that, hopefully through trial and error. But the idea of only sizing a certain amount and taking a certain amount of risk, like it doesn't really make a whole lot of sense. There's some times when you really want to take a lot more risk. right? If you're playing a hand really well, if you have a setup that you realize performs exceptionally well and you have some kind of data to back that up, right? There's evidence based. And why wouldn't you want to have, why wouldn't you want to take the chance on that one a little bit more than on, your regular sort of intraday punt that's, can go one way or the other, 50-50.
Yeah, thank you for that public service message. I just wanted to get that out through you. So shifting gears a little bit, a couple of days ago, you tweeted something about, hey, does anyone want some homework? If you could, divide the data into 2 intervals in terms of the New York session, and kind of pointing to market microstructure. How important do you think it is to understand nuances on the asset or assets you trade on versus a lot of people, just trading the chart regardless of the ticker? Is that context dependent, depending on the market conditions? What are your general thoughts on that?
I mean, there's sometimes when it matters less, right? When you're not focusing on like the most idiosyncratic things about an asset. Like at the beginning of this more recent run, you don't really have to be a picker. There's obviously varying levels of beta, and playing Solana versus something else might have meant that you made a lot more, but there's still, you could just kind of throw darts across the board and return exceptionally well. Well, first and foremost, what I should say is that like almost as important as like understanding risk management for someone who's new is having a really deep understanding of what you trade, right? So whatever product you trade, having a really deep understanding of it. And that means having an understanding of market microstructure, right? How does it trade around the open and close? Who is trading it? What's the average range, average hourly range, average daily range? How does it trade around catalysts? How does it trade around different times of the day? What types of participants are trading it? How does transaction costs affect it? What is it trade? How is it trading across different sessions? For example, over the last 2 weeks, New York session was getting slammed compared to every other session, whereas that was flipped previously. So I think you want to have an understanding of like the nuances and really have a deep understanding of the product you trade. If more or less, more so if you're focused on, if there's a period, more recently, like I said, you didn't have to focus on just one thing, right? It made sense to, if you were able to take those longer term trades and not like meddle with them, you did much better than if you were just like scalping throughout the day and trading these weird little idiosyncrasies. But yeah, that tweet was about, so for example, there's just some things that from a statistical standpoint that you could lean on and that are very basic, and you want to have them in your bag of tricks. And I think like people, if they know me as someone who uses market profile as one lens, the more common one is the Dalton rule, trading back through value, and that's the most common one, I think. But there's, with the ES, like the ES, the higher the low is usually put in within the first hour of the day. So that can at least to some degree inform your decision making if that is done like 75% of the time. And then if you're trading like a single names, if you're trading, single name stocks, whatever it is, whatever stock it is, having an understanding of how it trades, in the first 3 hours of the day after the open versus how it trades in the afternoon session, even having an understanding of the prior day's range and what it means. If you have a really big range prior day, and you start off the open, the next day that follows, you start off the open and you're still, there's no move behind the open at all. Like your trend's probably, in that case, you're probably looking at a day that's going to be more of a mean reversion day, that's going to be more range bound. And so having an understanding of these things, like to say, 65% of the time when the market has a larger range after 12 p.m. versus, after 9:30, there won't be continuation the next day, or the market is like to retrace or trade back through that range. At least having an understanding of that can help inform your decision. And that all kind of falls under the umbrella of having an understanding of what you're trading. So, and I think for a lot of people who trade BTC solely, like should absolutely know almost everything and anything about how that asset trades.
100%. And I've been following you for a while, so I know how often you you talk about these things. But I just wanted to get that education out for people because, having a statistical approach and understanding the nuances, because a lot of people are just fucking winging it, right? And along the same lines, you were talking. I mean, I wanted to ask you about this anyway, but you just literally tweeted about this earlier today. The discussion regarding TA versus order flow, and people come in when people come in to trade and start trading, they kind of get bombarded in like by all this information in terms of what frameworks to use, how do you say like someone should start off looking for an edge or which frameworks to use?
Well, I mean, it's tough. First, you have to just come in and observe the market and see if there's any phenomena that you could take advantage of. If there's any kind of repetitive pattern that takes place, and and this does touch back on what we just talked about with market microstructure and just different nuances. But I mean, the most important thing I would say is people have an understanding of just supply and demand dynamics, horizontal levels. Like if someone's going to
Right.
start with one thing, horizontal levels are probably the most easy to understand, most simple concept, and it makes sense why they work, right? So where people get in trouble is where they like open up a TA book and then they're bombarded with like 50 different indicators and
Yeah.
pitchforks and GAN fans and stuff that all is basically just uh, TA is descriptive. It's not prescriptive, right? Like trading patterns, I think just if you just run the numbers, like it's not,
Right.
maybe in crypto, it's a little bit more um, actionable because it's a very retail driven market and people are trading around the same patterns and same ideas. But the same note, like now that can be so easily taken advantage of and manipulated, right? To goad people into making decisions. But I would start with, if like best case scenario, which never happens because people want to like jump into the deep end of the pool right away, have an understanding of how price moves, right? So have an understanding of liquidity, how market orders move, how excuse me, how market orders work, how limit orders shape price, um, how an understanding of market microstructure, like at a CLOB level, right, at an order book level, um, basic stuff, right?
Right.
Basic mechanics before getting into anything like,
Yeah.
TA.
Yeah, and I've seen this a lot. People just don't even understand what a maker or taker is, or how the order book works, and they're just fucking like looking at all this TA on. I think Twitter is predominantly like a big significant causes a lot of issues when it comes to that. Like a lot of the information on Twitter is like misleading people.
It's terrible.
Yeah, it's atrocious, and so along the same lines, what qualities do you think are key for a trader to be successful? I mean, you've been doing this for a while now. What do you think? What do you think is like the common theme or the common thread?
Well, I mean, they have to have some level of, I don't want to use the word degeneracy, but they have to have some level of interest in being a risk taker, right? Like you're not going to find that like the best traders are the really conservative ones. The ones that make the pages and make the history books, they all have like that little bit of an adrenaline seeking behavior in them. And obviously it has to be calibrated. And then, conscientiousness is really important. Brent Donnelly talks about this. Being someone has a very analytical mind. These things are really just simple concepts, right? Trading is, I think it's a game. So if you do well playing video games, like if you could pick up onto the meta playing video games and have that kind of addictive personality, I think you could do well trading. Most importantly, though, probably one of the most important things is self-awareness. So the grit to keep going, because you're going to get your ass kicked for a long time, and self-awareness. And I say self-awareness as probably the most important thing, because I, I, I think that most people very quickly can identify what they do wrong, right? Like if someone sat in front of the desk for 6 months straight, they probably can identify what they consistently do wrong. And for most people, it's usually like chasing things, right? Like not being willing to buy low and then chasing something at the worst possible time because it's going parabolic. So I think most people can identify a couple things that they do wrong. And maybe in the beginning, it's not having an invalidation for your idea, whatever it is. Having that self-awareness is that's something everyone is able to do. But then to be able to course correct is where I think just everyone just goes off the
Yeah.
rails or is unable to do that and then to have that discipline to course correct. And I hate to like, there's a lot of times like you listen to like a trading podcast and it's like, what are the best qualities of traders? And it's like discipline,
Right.
listen, that word gets thrown around a lot, but it's very important because you have to be able to stop yourself from doing the dumb shit that that you do all the time. And most people are going to end up they're in a position where they're a manual discretionary trader, and the final decision actually comes down to them anyway. So you have to be able to just obviously cut yourself off at some point and to say, okay, I'm being a dickhead. Like I consistently do this wrong. I don't want to consistently lose. So it's sort of like I said this before a couple times. Like you have to kind of be how an addict is at some point, where you're just like, okay, I'm sick and tired of being sick and tired.
Right.
Like I have to do something different because this fucking sucks. And with trading, it's not like the difference between being really passionate about trading and not changing is not the same as being someone who's like trying to make it into the big leagues playing baseball or to pursue any other passion. You could continue to go outside and shoot 100 free throws a day, and maybe you just don't have it. But what do you lose? Like you lose your time, right? The time you spent going after that. You get something out of it though while you're doing it. But with trading, like if you continue to do the wrong things, you're just losing money, right? You're not gaining anything really from it. So you have to have that early. You have to be able to identify your own issues early, and self-awareness. That's probably why I put that as like the top of the pyramid.
Yeah, I agree 100%. And I think there's a quote on in trading in the zone. It goes something like randomness is unstructured freedom without responsibility. So I think like the structure part is extremely important. Like being able to give it structure is what you're touching upon as well. And on the opposite end of the spectrum, there's this book called Best Loser Wins by Tom Hugert, and he talks
It's
about
one of
how
my
important it
favorites.
is. Yeah, it's an amazing book. For anyone listening in, please read that book. It talks about how important it is to be able to accept losses and not have your ego tied to the market. And so my 2 cents is for anyone just starting off, the goal should be to conserve capital and pay the tuition to learn, collect the data, and develop a feel for the market and to create an edge. But you've been in the market for multiple cycles now. I've seen people come and go. I'm sure many people reach out to you all the time. I blew up my account. This happened or that happened. What do you think are the cardinal sins or the flaws? I mean, it's a pretty straightforward answer, but I just want you to like just verbalize it so people can hear. What do you think are the cardinal sins or the flaws that contribute to people losing all their money and have to like just basically shut down their shop?
Well, I mean, one of them is obviously they have no reason to be in the market. They're chasing what their favorite influencers is saying about an asset that they've probably already been in position for, who knows how long. And they're just following people. So they have no compass for themselves. They have no idea how to navigate the market to begin with. And they're just chasing momentum. I see, like all the time, people hit me up, I've blown up my account. Like it feels like every other day for the last couple of months, I've just had message after message, and yeah, I feel bad, but they're not trying to actually sit down and figure this out, right? They're just depositing money and treating it like, treating the exchange like a slot machine. And I don't think that the culture instills good values like on CT. That's what I'll tell anyone. Like, I don't really like crypto Twitter that much. I think
Mm-hmm. Yeah.
it's like everything else, right? Where there's a big pool of information, there's a ton of noise, and the relationship between and noise and signal is nonlinear, right? So you have to do a lot of digging. Fortunately, there are other people that already know where a lot of the good information is, and you don't have to curate it for yourself. You could find those people, you could ask their advice, they could point you in the right direction. But when you get those things when you get that information, right, that is valuable and you can learn from some people, you have to take that and just go do something on your own with it. You can't consistently try to look for Twitter for advice or for some kind of uh, mentorship or role models to continue to follow. You have to eventually start taking all the information and making something for yourself out of it. And I don't think a lot of people do that because it's a big followers market. Like there's a bunch of lemmings in this market.
Yeah. 100%.
And the idea is to always like go big or go home. And that's really stupid. That the only people that you see around still that have done that, it's just a matter of survivorship. It's like, yeah, they represent the sample that normally would be represented. You just happen to be able to talk to them on Twitter, so you get a more personal view of them. But they just got lucky. You
Right.
know, that is not something that you can extrapolate on and expect success long term from. So you have to dig into this and really try to figure it out, because otherwise you're taking for granted one of the most difficult games in the world, right? Like all the time, like people approach me, hey man, you're a trader. Like, how do I've been thinking about that trading. And I'm like, do you ever go to your fucking surgeon and say, hey, I've been thinking about being a surgeon? No, you
Yeah.
don't. You'd feel like a fucking asshole, excuse me.
Yeah.
Um, but for some reason, trading is like, it's seen as a game from the get go.
Yeah.
A lot of it also is the access to leverage. Like, There
100%.
is a bunch of access to leverage. It's not baked into the products the way it is. Like if you're trading the ES or if you're trading, the NQ, and you just have to have a certain amount of margin up, and depending on what broker you're using, intraday margin is different than overnight margin. You could get access to those products. You could trade the ES that is, over $250,000 notional. You could trade it for like $1,000, right?
Right.
But instead, like on these exchanges, right, you have access to 100x leverage. And I talked to a friend recently. He's blown up his account multiple times. Every single time he thinks he's figured it out.
Yeah.
He's a guy who has a traditional background in markets, but he's not a trader. And for some
Right.
reason, he thinks he's going to be a trader. And I talked to him about it, and he's like, "Oh no, dude, I'm good now. All I'm using is 5x leverage." And I'm like, "You think that sounds like it's on the low end because you're thinking of the spectrum of 0 to 100, but
Right.
5x leverage is a fucking
So,
lot of leverage
yeah.
because you have to be really precise because this market moves around a lot.
Yes.
You could, when you zoom out, you might get the direction right, but the path it took to get there is taking you out multiple times before it does. So there's a lot of landmines for new traders
Yeah.
in this market. I'd say get a little bit of information and then go off and experiment on your own. Journal, absolutely journal, because if you don't write down all your bad experiences, you'll never be able to, you won't reflect on them the same way. When you write something down, like if I write something down, and I've had the privilege of not blowing up an account, like thankfully never blown up an account. Early in my trading, I obviously nuked accounts,
Right.
but I've never been liquidated trading crypto, right? It's like a rite of passage here. You know, there might be, I should phrase that differently. There's been positions that I've used liquidation to define exits on because I've known that it fit perfectly. The amount of margin up for that position was the amount I was willing to risk. But other than that, like accidentally liquidated, never. If you are doing something and not journaling, it's not going to be available to you to think back on, versus if I do something dumb and I journal it, if I do it again, I'm an asshole because I
Yeah.
saw
Yeah.
last time how I
Right.
felt the day after. I wrote it down. I made note of it. It should be crystallized. Um, and I think people start off on the wrong foot here. And I think a lot of it's because of this like whole culture that crypto Twitter instills.
Right, right. Yeah, the bar for entry is like non-existent when it comes to crypto and access to leverage, and the level of disillusionment is like insane. Like I have people talking to me like, "Oh, I'm using like 20x leverage," and they just started trading. Oh, that's low, right? I'm like, "What are you talking about? Like 15, 20x, 10x? Like that's not low by any sense of the word." And so
Yeah,
yeah, I just want to get
everything
that
is,
message out for you. I appreciate you answering that in detail.
of course, everything, the whole perception of like what traders are on crypto Twitter is a complete bastardization of
Yeah.
reality,
Yep.
but that's the way it is because it's a social media platform.
Yeah, 100%. All right, so I like to shift gears a little bit and talk about the market a little bit. You're pretty vocal about your views on the market, and you're really flexible and adaptable in that sense. You talked about up in the long term, down/chop in the intermediate, especially with the ETF news coming out. And we've gotten some relief on Bitcoin recently. We have some mean reversion, and also have seen some recovery. But what are your current short-term thoughts regarding the market?
Yeah, I mean, so far, like for every time I could pat myself in the back, there's a trade that I completely missed or a call that I made that was, completely off. But so far it's gone exactly as I thought it would. I think I posted about it in November, said from time T0 of listing. So right when the ETFs listed, market would move up, we'd pop up, and then we'd probably sell off, consolidate for a month or two, before resuming, hopefully around the halving. And I don't think much has changed, honestly. I was able to sell a good amount of spot because I felt like it felt like we were reaching sort of a fever pitch, at least in the short term. Like
Yeah,
people forget, like, and this is another crypto Twitter thing, which is why I'm becoming less and less prone to sharing like more shorter term views.
yeah.
Because if you talk about a blow off top, everyone's thinking about the blow off top as in
Mm-hmm.
the top, but the market was moving, the market was starting to get pretty overheated. We had some parabolic moves across the market, and we had a really well-known catalyst, like for a really long time, that people were definitely positioned in advance of, right? It's very easy to tell that the market was long into the event, and there's definitely going to be profit taking because not everyone is a degenerate. Like funds and larger desks, they're going to be taking profit before some person's like imaginary 100x take profit level. Like even like TradFi getting in this market is going to change it because a 2x is a lot to someone coming from TradFi,
Right,
right?
right.
Versus like if you say you got a 3x on something, people laugh and they're like, you held for 3x. That's nothing. I'm making 10x on my,
It's insane.
20K liquidity shitcoin. So I do think that we're entering a period of, I would say, like a non-easy period, because
Yeah.
it doesn't appear like the hot ball of money is carrying everything up right now. It looks like it's a little bit more about selection, and identifying where that little bit of flow is traveling through the market, because it's not the case that there's that rising tide that we had. And, I think this is completely healthy. I think like people debate about, so I personally, I think that we could trade lower. I think we could trade down to 35. Maybe that gets
Yep.
front ran. It's not off the table for us to move lower. Like, anyone who's been around knows that they should never think in terms of like absolutes. Like,
Right.
when people start saying we're never going to trade below 25, we're never going to, I think that's so dumb. Like, you've seen how many times this market has
Yeah.
just ripped off faces
Yep.
in both directions and blown out expectations. But yeah, I think it's completely reasonable for us to trade in a much larger range for the next month or so.
Mm-hmm.
And then the thing that is most reliable, and I'm mainly talking about BTC right now, because I think a lot of the market hinges on this. The thing that's most reliable in this market that does have a very limited sample size is the halving. And I don't think it's because of, the actual mechanical change that takes place, the supply and coming to the market, and how
Right.
that affects the market, as much as it is the biggest narrative that this market has. And this market is so narrative driven. It's not a matter of the fundamentals as much as it's the belief behind the people that are actually pressing the buttons. And that becomes very self-fulfilling. And I think that we still have that. I think you're starting to see a little bit of strength right now in advance of that. People, picking up a decent amount of supply, is a good amount picked up on Bitfinex over the last couple of weeks,
Right.
even for the amount that we've seen sold on Coinbase. So big picture, like, nothing is really invalidated, but we're taking a very needed breather. I mean, it's good to have some dispersion, and
Absolutely.
hopefully, some of the fat is trimmed and we kind of get rid of some of the garbage, because there's a lot of things that went up that really shouldn't have, I'd say.
Yeah.
But you can't get too much in that frame of mind, because for me, I could look at this market and say nothing really deserves these valuations, because they don't do anything yet.
Yep.
They're doing things for there are applications on protocols that are doing things for that blockchain, that the blockchain isn't even doing anything outside of the blockchain yet. It's all for the potential of eventually doing something. So I mean, listen, I think we have maybe another month or two, and then ideally, I'm not going to say like then it's up only, but ideally, once April, May rolls around, like, you want to see that flow get
Exactly.
back
Yeah.
into the market, because that's what you want BTC to trade above 50. BTC trading above 50, trading back towards the higher portion of that last 2021, 22 range. That is going to, create sort of a risk on moment across the board, I think. But absent that, I'm just expect kind of a chop fest.
Yeah, thanks for answering that. I mean, I was thinking about this for a while as well too. Is having such a large news event close to the halving, if it was going to mute the entire thing, or how that was going to end up playing out. But that's neither here nor there. What I wanted to get your thoughts on is the overall market as a whole as well. So you did this interview with Kurosh about 6 months ago, and at the time, we had the USDC DPEG. This was on the back of like the FTX collapse and the USDC DPEG, and you talked about crypto as being the easiest poker table to play at, with the qualifier that is for players that have been around for a while. And then you discussed this concept of risk premium, as being money being on the side of the street, but when it comes to crypto, it's on a 4-lane highway. So obviously, I've given the context of that, but I wanted to see if your thoughts have changed at all during that time period, and what you
Yeah.
think of
So
it now.
first and foremost, I don't want to take credit for that great analogy. That's from Ewan Sinclair. So he's very well known in the option space. But the analogy is that, there's, so for example, like a market like traditional markets, like equities, futures, anything outside of crypto is way more efficient. So in an efficient market, a $5 bill left on the sidewalk shouldn't be there for long, right? People are going to pass it. They're going to see it. Someone's going to pick it up. Okay. Crypto is the 4-lane highway where there's a lot of money, right, in the middle of the highway, but you have to navigate all those vehicles to get to it. And it's not as compelling for, at least before. Uh, well, it's more recently. It's going to be more compelling for traditional players to get involved. From a constraint standpoint, it didn't make sense for a lot of them to come in here for the amount of capital that was available, even though it was the case that a lot of the trades were easily taken advantage of. So I think that's obviously going to change with the advent of ETFs and crossover between TradFi and crypto. My view is still that it's still a very inefficient market. Like if anything, after through the course of the bear market, it became more inefficient. Um, it's still very inefficient. I don't think that's going to change like overnight. We saw that some of the market makers and desks that were trading this market and enforcing correlations stepped off. So a bit of efficiency went out the window. Then I don't think that it's changed much with new products, right? So it's still a very inefficient market. It is by definition, in my opinion, the easier poker table to play at, if that's how you want to put it. It's definitely the easier poker table to play at. It's definitely the one with there's less capital available, but it's not meaningfully less capital for most individual traders. Like it's less capital available for someone who's like a massive pension fund or massive corporate. But yeah, it's still a very inefficient market. It's the long-term view on crypto is I think it's pretty simple to understand. It's a new asset class. So, there's no one around right now that can say that they're around at the beginning of of when stocks started trading or thousands of years ago's commodities. Um, there's no one that's alive today when any market began. And you can't say that for crypto, right? Crypto is just over what's 13 years old now. So you're able to be around at ground zero, basically, even though people will debate, whether it's early or not. But in the grand scheme of things, if you're considering this asset class to continue, which it will, you have an early slice of the pie, right? You potentially have the opportunity to get an early slice of the pie, whatever that means, whether you're buying, the shovels or whether you're selling the shovels or digging for the gold. That and, it's a concept of like with science, new science progresses one funeral at a time because old scientists and their ideas, they die with them. There's a lot of people that in traditional finance, they kind of look at crypto. I was going to combine crypto and the word stigma. This market has a stigma, right? Well, at some point they're going to be retiring, they're going to be dying off, and millennials and all of the younger generations, they're embracing crypto. So it's a matter of time before it's just carried through time. It's before it's carried through by these generations because they're interested in it right now. What young people are interested in right now is what's going to find itself into the future. So I think it's kind of easy from that standpoint. From a different angle, now you can't really look at prior cycles and this one moving forward the same because it's just completely different market now from a player standpoint. So you have to know the players in your market, right? I talked about earlier about knowing your asset, who trades it is very important. So now we have ETFs, and there were exchange traded products before, right? They were trading, their exchange traded products like Beto, but that was based on a futures ETF. Yeah, that was a futures ETF. So there was obviously CME futures that were available, but there's different reasons why these aren't advantageous as something like an ETF is. So now we have ETFs available. We haven't even seen the marketing arm kick on yet. So, for example, it's only been there's probably been like 12, 13 trading days total for the ETFs. So it's probably felt like a long time for everyone who's focusing on it every single day, but no time has passed. So BlackRock, all of these issuers, all of these larger money managers haven't even really turned on their marketing arm yet. Like this is something that they're going to put money into to get in front of everybody, right? They say that Wall Street doesn't buy, they sell. No, what that means is anyone listening might think that means the more common thought in crypto Twitter is that means that they're selling. No, it means that they're literally going to bring it to people to put in their portfolios and to add to their retirement accounts, their individual portfolios. They're hopefully try to add it to pension plans and onward and upward. So that hasn't even really began yet. We haven't had those passive flows yet. It takes time for those things to occur. Like people don't realize crypto Twitter is a completely divorced from reality in terms of how fast things work in markets. Like we want things now. It happened fast. In TradFi, it takes a long time, and they're completely content with things taking months. So there's a lot of sign-offs that have to occur before anything happens. I think that what happens is you're going to have this added to portfolios, maybe 1%, 2% max, very low end. It'll be rebalanced. But the thing is, like, once you start adding it to those products, it never gets taken out. So, your future, your grandparents, whoever buying these products or having their portfolio structured in this manner, um, it's never going to be the case that their Bitcoin is going to be taken out of that after it's placed in. So you never really see that allocation go back to zero. So over time, hopefully it benefits from the passive flows that lift all assets. And this is something that provides us with hopefully, some level of volatility dampening, positive drift over time. Whatever it is, it's going to change this market, and it will continue to take it higher, in my opinion. So big picture, I think it just continues to get better. There's just so much that happens on the low time frames that people focus on that they don't realize how simple I think the bigger picture trade is. And then I've been going on, I'm sorry, but I always use Bitcoin as the example because it is like the lightning rod or the signaling mechanism for this market to everyone outside of this market. So the worst thing is that ultimately the more retail get involved at a break of an all-time high than anything else. So when we start putting in much higher prints, maybe it happens before that, then you'll see people really start to get interested in everything across the board. And that's why I still think that we haven't seen complete excess yet. But that's also a reason why I don't think it's that important for me to like stress over focusing on every little thing that's happening while Bitcoin is, hopefully putting in a period of consolidation over the next month or so.
Yeah, thank you for answering that in detail. And you touched on this basically, but I think the thing that people are worried most about is, and there's discussion on CT about, oh, this is a last cycle before the volatility goes away. And what they're really referring to is all the shit coins and, all this behavior and alts that people can take advantage of. What is your thought process on that? I mean, you basically alluded to it, but how long do you think before the market becomes muted in that sense?
Never. I honestly think that's a really dumb thing to think. And the reason is like, there's this thing in human psychology where people think or even kind of romanticize being around at the end. And in crypto Twitter, there's a good example. It's always like, this is the last cycle. This is the last time to get involved. And this creates a ton of FOMO for anyone. This is one of the things that makes crypto Twitter bad for new people also. If you could get your information, that's great, but then leave. And then come back for your entertainment because it is entertaining. But it's the FOMO that's created, like as if now is the last time, for generational wealth. And
Yeah.
it's always generational wealth to be made in
Yeah.
markets. Literally every few years, something crazy is happening. And one of the great examples is like traditional markets have continued to be very volatile. The VIX might be low, but there's plenty of opportunities to take advantage of, and that just doesn't change. But people, for some reason, there's that little bit of doomer in them that makes them think that it's the last time to make serious money. You have to get involved now, and that's just not the case. Like, if anything, I think it's proven that we're going to continue to have future cycles. I'm sure they'll look different, right? They'll look different. It probably won't be as generous across the board. It'll be more about selection, the way that, equities, the way that equities are. But there's a lot of people that trade crypto that don't realize if they took their approach to trade like smaller cap stocks, pink sheets, penny stocks, even greater, they would probably do really well also. Like there's been many times where stocks have outperformed crypto and then crypto catches up or, one lags behind, but it's not the case that opportunity is left. Every few years, something is happening. And I think like more than ever, it should be obvious now with the advent of some serious AI that we haven't even seen, the AI bubble yet. I talk about the AI bubble and we might be too early for it right now, but I think it's on its way. There's only been a couple companies that have benefited from AI, and it's easy for them to swallow up AI companies that would normally come to market and IPO. You have Nvidia, you have Microsoft, Apple, Google, all these major companies that can swallow other companies, and have benefited as the AI trade more recently. But I think that crypto is a great market to take advantage of an AI bubble because there's really not much that's required for a project to come to market here. I think you have your AI projects, AI related projects, but I think that we haven't had the bubble yet in TradFi. And when we do have it in TradFi, we'll see it even more in crypto. So it's just one other thing. Like what it's every few years. It's like maybe every 20 years there's a major bubble, right?
Right.
But every couple years there's a new innovation coming out that you could take advantage of if you're trading the right sector. So I don't see why crypto's so far away from like even the changes that are coming to this market. Like when you hear about changes coming from regulators, those things take like a long time to work out. Like even a lot of the more recent changes in this market that are striking, that have maybe not so much now because people forget about these things when prices are moving up. But a lot of the things that were occupying people's headspace months back and were more existential, like, is this market going to exist? Are we going to be able to trade shitcoins anymore? All the bills that were coming out, like a lot of them are never going to see the light of day, never
Yeah.
get a chance to be signed. And even the ones that do get put through that could change market structure, um, that's what 2026 like this there's still a lot of time left for
Yeah.
the casino to keep the lights on.
Yeah, I agree 100%. I mean, people don't understand how slow governments and agencies work. I mean, they move
100%.
move at a turtle's pace. So talk about CT. I just want to shift gears a little bit. So there's obviously a cult thesis around meme coins, and every time you talk about it, people always come after you. But I just want to touch on this really quickly. And you paraphrase something along the lines of markets being inefficient and technically driven in the short term, but efficient and fundamentally driven in the long term. Um, and like you referred to this in this conversation, this concept of short term and long term, like people misconstrue that quite a bit. But I want to get your thoughts on it a little bit more if you want to elaborate on that on the entire meme coin thing.
Yeah. So the quote was that in the short term, markets are inefficient. In the long term, they're efficient, right? And it's like there's an old Benjamin Graham quote: "In the short run, the market is a voting machine, but in the long run, it's a weighing machine." So in the long run, value should accrue to the things that deserve it, right? The fundamentals should matter. In the short run, it's more about positioning, it's more about flows, more about narrative, momentum, and all those things that we like to trade in this market primarily. We like to advertise things as having fundamentals, and reading a white paper will send something, 2 to 3x. But yeah, meme coins, I don't. So my comment with me, the trouble with me is like sometimes I'll tweet and I won't make a thread, but I'll just follow up on the tweet and then forget that someone will see that in isolation, not go to my page and not see that it's like chronologically set up so that I'm saying something right after that's, responding to that prior tweet or in sort of light of
Right,
that
right.
prior tweet. Sometimes I just tweet too casually, to be honest. I'm just like shouting off my
Yeah.
porch. Um, but my comment was more like, this market does need a new major narrative. Like it needs a major narrative, and
Hmm.
it needs it beyond just the halving. Like
Yeah.
DeFi was great, but then there were so many cases of that blowing up. And we haven't really seen the extent of how that is benefiting or crossing over to traditional markets. Uh, we have a couple narratives right now that, I think have the potential to have legs, and whether that's AI, whether that's real world assets, um, you know, traditional assets being tokenized. Uh, but what I say about like needing a narrative is like we need something for the bigger trend. Meme coins are not going to take us off of the lows and propel us to new heights, like because this market offers meme coins. If it would, that doesn't even feel comfortable to say. Like that makes this market kind of like a joke. And at some point, like you want there to be some substance to this market. People get tired of tricks, right? They get tired of the same circus trick over and over again. It's not something that is very sticky. What meme coins are is a really good like signaling flare. For example, like they just gather a bunch of attention, like Bonk and Whiff gathering a bunch of attention for Solana. But those things on their own, like every cycle, it's like what we're trying to do is recreate the prior cycles, patterns, stories on the next protocol. So we're doing what we did with ETH on Solana now. So it's like Solana was like a cycle
Hmm.
behind ETH,
Yeah.
and then what we always try to do is, I want to find, and listen, this is what people do with Bitcoin. They want to find the next Bitcoin. They want
Exactly.
to find the next Doge.
Yeah.
Um, and those things, it's just not that easy, right? So instead they're trying to reinvent it. And
Hmm.
I think there's a really strong correlation or relationship between how tough it is to bring something to market and how well it's going to do. And you can invent meme coins now with just a little bit help from someone on Fiverr. There's probably websites that you could just
Oh
use a
yeah.
little AI to create a meme coin, and it's trading, right?
Yep.
um, so these things are not sticky, right? what I had to clarify to people was that they were taking that as me saying there's not great trading opportunities,
Yeah.
but there are great trading opportunities, but they're not things that I would ever keep in a long-term portfolio. I always have to say, like, a lot of time I am speaking pretty broadly though, because there are things that I have my personal picks, right? I do think that, I was someone who was saying like Pepe. I think Pepe is going to do well across the next cycle. I do think that, Bonk and Whiff have the potential to do well across the next cycle, across this cycle. But, do they do well relative to maybe something else that's maybe got a more compelling story? Is it the right position to express my bullishness on in this market? I don't think of them as serious things because on face value or just they're advertising themselves as being a joke. And I just don't think those things, they really last. There's no real substance to them unless there's something else created behind them. I think the Bonk is obviously more than just it's attempting to be more than just vaporware. But we've seen how in this market, even things that are, you know, um, that have a great team and that have a great plan and, the application seems like it makes sense, it still doesn't, that doesn't get taken seriously, and we see how those things aren't sticky.
Right. Yeah.
So I'm very weary of things that from the outset describe themselves are sort of self-deprecatory, calling themselves a joke right at the outset by being a meme, right? Memes
Yeah.
naturally will pop out. Something will
Right.
naturally. Doge is organic. This is something
Hmm.
that's been around for a long time. I don't think you can create those things overnight.
Yeah, and that's perfectly sound logical reasoning. I just find it amusing that people get pretty worked up about it on Twitter. People get pretty
You know what
vengeful
that
about it.
that all that is people when they need their bags to go up.
Yeah,
You
exactly,
know,
exactly. That's what it is. Like, why, horse? Why are you fun? Why are you funding my packs?
yeah, because you got in recently.
Yeah, exactly. But along the same lines, really quickly, you talked about narratives. Are there any narratives that you're keeping your eye on? And I also wanted to ask, there's this narrative of perp stexes, especially after the FTX collapse and that entire phenomena. What do you think is holding up perp stexes currently, and do you have any thoughts on where that sector can go in the future? Really quickly.
I mean, what's holding up perp dex is one. There's always, yeah, I guess it's one. There's always smart contract risk. Like that is something that you're not going to, when you want something to succeed, you're going to want a ton of money to come behind it, a ton of money from traditional players to come behind it and validate it. And I think that that type of money still has some hesitancy about trusting the actual tech. Um, Other than that, it's like there's an efficiency component to it. Trading on a CLOB on a SEX it's something that everyone is already familiar with. It's very easy to transition from trading, a traditional brokerage platform to coming to crypto to trading on a centralized exchange. Um, there's a degree of accountability there, I guess. I don't think that dexes are going to be the future as much as other people do, because it will be, as much as people like to think that things are going to remain really decentralized. Um, if if the government of the United States wants something a certain way, it's absolutely going to happen. So, yeah, and that is this is the biggest market and probably the most important market. And now that we have our ETFs, trading on the NYSE, and I think we're going to see more traditional money come into this market and more products come to market. I just don't see I don't see how DEXs in their current form have an edge other than, I should rephrase this from the start and say that if you're a smaller trader, I think you should trade on a DEX. Like if you're smaller, dealing with a smaller amount of capital,
Right.
you should trade lower caps. You should trade on a DEX. I think there's definitely um, there's a place for them. I don't think that they're as good as centralized exchanges. Uh, from a speed standpoint,
Hmm.
listen, but I haven't dug in as much as other people have on some of these new dexes. Um, so I am part of, for example, I am on the Synquo team, which is a decentralized options exchange, but it's not the same. Like it's not as important as it is for someone who's like a scalper to trade. You can't scalp on a DEX, right? So there's a whole
Yeah.
wasp
Yep.
of a swath of people that are just not going to be interested to begin with. Um, yeah, I mean, I could probably go on about this, but it's not something that's as compelling to me. It seems like the easy narrative to jump into And those easy ones, I think, are the ones that don't necessarily work out. It's like, yes, it's to the ethos of crypto. Decentralized is the way. We saw what happens with FTX. It is the future, and it's a lot of the times the case that that's not how things work, right? It's that obvious, but it's not the case that is the it's going to start sweeping sex volumes and start dominating.
Right. And so that being said, you talk about it being an easy narrative. What do you think are some difficult narratives, or do you have any other narratives that you have your eye on?
I mean, another narrative that I think is a little too easy and too early is the gaming narrative. I don't see that. I see that one as a very easy narrative to arrive to, but it doesn't look like there's a whole lot of meat on that bone yet. Uh, Games are really tough to make. Gaming companies are massive for a reason. Creating a game is very expensive. Creating the hype and the community around the game, that takes a long time. It seems like crypto is trying to create that very quickly, and the games are very shitty from what I've seen. It's
Yeah,
like
yeah,
everyone's getting
absolutely.
hyped up
I've been
over
seeing that
things that are
behavior.
like a generation ago, a couple generations ago, for what you've played, in your bedroom. Um, but from things that I think the most compelling narratives to me are, I think, just where this market is going to go from a secular standpoint is who is going to come out. Uh, well, one, there's going to be a bunch of pivoting, right? I think a lot of current projects are going to attach themselves to AI when we see an AI bubble start to manifest in traditional markets. So I think you're going to see pivoting and attaching themselves to that narrative. But what actual protocols or applications are going to come out that are AI related and um, I guess compelling to me on a technical from a technical standpoint. I haven't seen anything really that jumps off the page. I was actively trading some of the more AI, some of the more popular AI coins, but I think it's a little too early. I think, yeah, I think AI and real world assets. We were talking about this on the Synquote Spaces. I don't, from a fundamental standpoint, I'm not as interested in real world assets as much as I am seeing whether or not other people are, right? So it's like the whole Keynesian beauty contest. I think it's a compelling narrative for TradFi types. It's a new narrative. It makes sense, right? The tokenization of real world assets. I just, from a fundamental standpoint, I don't know if there's a whole lot of benefit to it. I guess from a liquidity and ease of use and transaction cost standpoint, um, it does make sense. But yeah, I would say AI and real world assets are where I'm trying to focus most of my attention on, even though I don't do a whole lot of digging into the actual fundamentals, but to see whether or not that actually picks up steam over the long run.
Awesome. Thank you for answering that. And then also, we're at the hour mark here, but I asked for some audience questions, and to be honest, they were fairly lackluster. It's like most of the stuff you've answered already. I had some people reach out to me, so you could just think of it as like rapid fire questions. Just you don't have to really get into too deep into these, but I'm just gonna ask a few of these. So one of them was, where do you see yourself in 5 years? Are you still going to be trading, and what would you change about your current trading? Like, where do you see yourself 5 years from now?
Yeah, I would say I'd still see myself trading. I don't need to trade as much as I did 5 years ago. Uh, so I would, I definitely, I'm here for a reason though. Like I really enjoy trading. I've managed to step away, I'd say healthily more recently, and it hasn't really bothered me. I don't feel like I'm missing out on anything. When the market really it has juice, I want to be in front of it though. I want to be trading it. So I don't think anything's going to change in the long run with that. I think I'm still going to want to play this game. Ideally, though, I'll have a little bit more outside crypto market investments, probably more real estate, and yeah, I don't think a whole lot's going to change. Honestly, it's always easy to think something will. Hopefully, I'm still doing jujitsu.
Yep.
Hopefully, I think that trading is a means to, for me, is like it's not a means to an end, but it's provided me with a lifestyle that I really enjoy. And if anything, I'll probably be less active in markets, but still be trading, but hopefully more active in like my children's extracurriculars, maybe coaching or
Yeah.
just doing something outside of this. But I
Yeah.
can't see myself not trading. I'm definitely going to be trading.
Yeah, that's awesome. And then off the cuff, so you mentioned something recently. You were talking about, hey, like, I talk shit about small cap trading every now and again, but That's mostly due to capacity constraints, right? And if you were to start out today, you dive into on chain and then look at DEX activity. So the question is, off the cuff, what are some things that come to mind in terms of growing a small? If someone has a small portfolio, what should they do in a bull market, or what advice would you give someone?
Well, one, if we're just assuming that they have looked into how markets work at a fundamental level,
Right.
um, the first place I would steer, though, if I started today and I had a small amount of capital, yeah, I wouldn't be on a centralized exchange. I would be trading spot on dexes, and I would be sticking with the small caps. There's people that they sort and sift through all of the on-chain data in a way that Flow Trader looks at flows coming through centralized exchanges.
Mm-hmm.
And I think that those markets remain a little bit more loose, but they're more technical. Um, I would focus most of my attention on the lower caps and decentralized exchanges for those reasons. I mean, how I would go about doing it, I'm not someone who's very good with Etherscan or any of the on-chain tools.
Yeah.
So I don't know exactly. I would point to people. So one thing that, yeah, so crypto Twitter, like I talk shit about it, but it is a useful tool or resource. If you have some help, right? If people can
Yeah.
point in the right direction. And there are people that are smaller accounts that put in a lot of work and put out a lot of information. And you could kind of copy them. I mean, be a good
Yeah.
copier, follow in their footsteps. I haven't done enough of that, right? So I can't say what tools might be useful as much as I can say those for, some of the order flow stuff that I look at. But yeah, I would strictly be on small caps and dexes. It just doesn't make sense to be on a centralized exchange and having access to that leverage where you're just going to knock yourself out always.
Right. Right. All right. So the third and final question, at least in the audience questions, is um, so someone asked, what are three actionable things someone can do today to improve their trading or make up? I mean, these are two different things, or make a positive change in their lives.
So, I mean, if you're not journaling, you should be journaling. And it doesn't have to be a lot of work, honestly, these days. Like just the idea of journaling, one thing I think is important with journaling is actually writing down, how your session went, writing down your feelings, right? How you felt after making decisions, but journaling as in just getting the hard data. So that's not tough now. Like there's a bunch of platforms and software that's available that connects right to your exchanges and your brokerage accounts through API and can compile all this information for you in a way that you maybe could see some very obvious mistakes you're making stand out, right? From a visual standpoint, you could see, oh, I suck on trading the weekend. I suck trading the weekends, or I suck every time I trade, Mondays, like just something simple like that. The idea though of having data to lean on. So I don't think a lot of people do that. They just wing it. And again, that used to mean for myself years ago, actually writing this stuff down or you know, creating an Excel sheet around it, or just physically writing the trades into a notebook. You don't have to do any of that now. Your work is literally done for you, and there's an insane amount of feedback you can get that, you know, I can't even recall all the things that you can find on, for example, like a Coin Market Man or an Edgewonk when it comes to the actual data and the breakdown of it that you can get. I could see, for example, like when I was trading the ES, I could see exactly um, when I went wrong from a time-based standpoint. I'd see that like most of my trades, if I held them for over 2 minutes, like those are all my losers. And it was probably because I was letting a position go against me, hoping it would come back. But you get a really good breakdown, and that's from journaling. So you have to journal because you have to be making decisions based on evidence, based on data. You can't really lean confidently on any good setups without that to begin with. So you have to have something to refer to. Um, as far as some other edges that are, I guess, less technical, less market oriented, like creating a healthy lifestyle outside of trading is really important. It's whatever you do, like you're bringing your physical self to it. If you're not taking care of your body, if you're not taking care of your health, if you're not taking care of your diet, like I don't care for every person that tries to point out an outlier that, sit at the desk, smoking cigarettes, drinking, smoking weed, not exercising, staying up for 20 hours straight. That is not that's the outlier. That's not reality. Like that's an anecdote. You want to be the person that is trying to get good sleep. You want to have a good night's sleep. You want to be the person that is eating clean, absolutely exercising every day. It just changes you as a person physiologically, mentally. And if you're playing the most difficult game, you should be bringing the best version of yourself. So I think that the most successful traders I know are people like, everyone loves to glorify the ones that are not, that are like like John Rambo. What's his name? John Mullen. I can't think of his name. He kind of looks like John Daly, the golfer. Like, everyone loves to glorify the trader that is like snorting lines of cocaine and like partying late and, you know, living a wild lifestyle. But that's the best ones that I've known throughout my time are people that are really serious about their life outside of trading, very
Mhm.
structured, very
Mhm.
healthy. And I think that you should aspire to make sure that you take care of that area of your life if you're trying to be, if you're trying to excel at anything, right? Regardless of whether it's trading, but trading even more so, because you are using so much energy just by focusing on the market. Um, so you have to just be bringing your best self to that. I know that I suck whenever I don't get good night's sleep.
Yeah.
I start to suck when I'm not, when I'm falling off my exercise routine.
Yep.
I suck if I have too much sugar. Like, these are all things that will affect everything I do, and will affect, since I'm doing the most of it is trading, will absolutely affect that. What else? I mean, having some kind of connected to that is having a structure, right? Having a structure you could repeat, whether it's kind of like a routine. um, whether it's uh, a some kind of ritual you do before you trade, when you're done, having something that you do every day, though, to kind of get you into that like phase change mode, right? For me, I like, my mornings are always the same. Every single day is always the same, basically down to what I eat, the
Mhm.
time I wake up, the amount
Yeah.
of time I spend on my couch before I head to the trading desk. Like I said, what I eat is basically my breakfast has almost been the same every single day for like the last
Yeah.
couple of years.
Yep.
Um, when I break, the way that I break, how I interrupt myself, like whether I'm taking a couple minutes to just like, it sounds kind of hokey, but do breathing exercises, spend a
Yeah.
little bit of time on the bike now that I have
Yeah.
my
Yeah. I'm jealous of that
Echo
bike,
bike.
by the way.
It's
I
awesome,
want
man.
one of those.
But having this, though, so that your day isn't like unstructured and loose, right? You
Mhm.
have to create some kind of framework, and you're going to trade better, I think, when you have a framework outside of trading, as you would in the market as well. I mean, this list can go on. There's
Yeah.
so many things you could do outside of the market to improve your trading, but I think as far as in the market, screen time and journaling, you know, observation mode with a purpose, not just staring at charts all day, um, and journaling. And I think you get the most out of that.
Yeah, I'm so glad you shared these things, and that's what I'm trying to do with this podcast too. Is right, yeah, the technical things aside, like what are other things that can be done, like the structure, your daily routine, like what are you doing for your body? What are you putting into your body? The body and the mind go together, right? And so I'm really glad you shared all of that. I use like this, so I have this Aura ring so to track my sleep, and that's been really awesome. Like it's like I see certain trends when I eat too late and what happens to my sleep. So I mean, you don't have to go that extreme, but like you said, I mean, looking after your sleep and sleep hygiene and working out and being active, I think are really important.
I think you're better if you do, though.
Yeah.
Like, this it's funny because my wife, for Christmas, my favorite gift that she got me was uh, it was a journal for jujitsu. Okay, and it's a trader that, of course, would have a journal for jujitsu. But if you want to do something at a high level, you
Yeah,
have to take it
absolutely.
very seriously. And for an athlete, that means watching game footage, right? That means journaling their performance. That means having a routine. And I've seen even my jujitsu transform with all of the above, right? I journal every single day. There's like different battery levels for how I felt, what my diet was. In the beginning of just a short story, when I got into jujitsu, I had come off. I was a wrestler when I was younger, so I thought I was just going to walk right back into it. I'd have the cardio for it. Big mistake. So one thing I couldn't get down was my fueling before I went, because I was going midday and I was taking a break
Right.
after eating breakfast, and into
Yeah.
the sort of like a period where you would normally have your postprandial dip, where you're just kind of, your energy's falling. And I couldn't figure out how to dial my diet down. I only dialed it down when I started writing down what I had every day and started adjusting based on how those days went. And I've seen, and I was not just looking at one day, seeing a change and then changing off of that. I was seeing, okay, consistently over a bunch of sessions, there's been a change when I've consistently done this. Not, I had, one day I had a different breakfast, different snack before I went, and then I did better. That might be anecdotal, right? I want to see that there's something consistent over time. And taking your sleep seriously, for me, that's massive. Like I become an asshole if I can't even get to bed early. Like I just start worrying about not getting a good night's sleep. So all these things are really important.
Yeah, 100%. I mean, these things are hugely valuable, and I hope everyone that's listening and really take it to mind and take notes on this, is because anything that you do, take it seriously. Whether you're trading, I mean, whatever you do, go all the way. And so, just to wrap it up, I know we're kind of going a little bit over, but are there any Twitter account recommendations or any accounts that you would like to nominate for an episode of Perpetual Perspectives?
So you already got your buddy Skew.
Yeah, we got Skew.
No, who would I nominate?
You can nominate a bunch of people. Anyone that comes off the top. I mean, you could give me a list later. You don't have to release it.
As embarrassing it is, I'd have to give you a list later because I don't share the same. There's a lot of names people will throw out, but I do think there are some small accounts out there that are putting in the work, and I should probably give you a little bit of list off of this rather than on the spot.
Yeah, no, definitely. Take your time. You can give it to me offline. And is there anything that you'd like to plug?
No, nothing.
Okay.
Plug living a healthy lifestyle, finding hobbies outside the market, not taking it so seriously because there's going to be a trend at some point continuously. Like it's not that serious. Like you don't have to worry about missing out. Pick your shots because if we are looking at a prolonged cycle, thankfully, hopefully the market corrects longer. So we're looking at a prolonged one. I mean, if we continue to go up, it would have been worse.
Yeah.
Understand that there's times when you can floor it and times when you can afford to just like take off and not feel a sense of urgency about being present all the time. Oh, one person I would say actually who's good. He's a friend of mine. Runner XBT. Runner XBT.
Okay. Yeah. I know.
He's a good guy.
Yeah, for sure.
But yeah, that's all I would say. I mean, hopefully I'll hop on here again.
And, this was a great conversation. I actually skipped questions, because of time, but I'd love to have you on again. This was like a great conversation. I thank you for taking the time to sit down and having this conversation with me.
Likewise. I enjoyed it.
Appreciate it. And I hope everyone listening in found this as enjoyable as it was for me to have this conversation with my, I hope I can say this now, friend Ryan.
For sure.
And, I'd like to end this with 2 quotes. So stop researching every aspect of it and reading all about it and debating the pros and cons of it. Start doing it. And that's from Jocko. And then the second one that kind of stuck to me is something that you posted, was amateurs do it until they get it right, and professionals do it until they can't get it wrong. And on that note, we are out.
Awesome.